Hello, and welcome to another episode of Everybody Counts. It is Malone Bailey's official podcast. Thanks for tuning in. I'm Caroline Rosen, and I'm from the marketing department here at Malone Bailey. Before we jump into today's topic, I wanted to provide everyone with just a very quick overview of our podcast. This is a podcast that covers just about any topic. So whether it's a technical topic or more of a soft skill topic, it's something that will likely be covered on this podcast. So we're covering anything from an SEC or a FASB update to more soft skill topics, non-technical topics that have to do with things like firm culture, practice management, some professional development, recruiting, retention. Like I said, everybody's input counts. And so we're going to have partners. You'll have partners on this podcast. We'll have staff on this podcast. And going to get a lot of great opinions and perspectives on a variety of different topics. So I'm delighted to be joined today by Patrick Wong. He is a senior audit manager here at Malone Bailey, and Patrick is going to be discussing a FASB accounting standard update pertaining to leases. And what Patrick's going to tell you in just a moment is that he spends a good chunk of his time on real estate clients. So leasing is utilized by many entities. And why do entities lease? Well, leasing is a means to gain access to assets. It's a means of obtaining financing, and it can also be a means of reducing an entity's exposure to the full risks of asset ownership. So since leasing is so prevalent, it's important that those who use financial statements have a complete and understandable picture of an entity's leasing activities. So on that note, let's welcome Patrick. He's going to provide some additional details on this amendment. Thank you so much for being here today, Patrick.
Well, thanks, Caroline. I've been looking forward to being on this podcast. I'm happy to be here to talk about this topic. I spent a good chunk of my time working on the REIT client, so this topic is right up my alley.
Well, and this is kind of different for you. I know it's a change from your normal day-to-day audit work. You know, being on a podcast is a little different, but I'm sure you're going to enjoy your experience here today. So before we jump into the topic, Patrick, why don't you tell us a little bit about your background?
Sure. I'm a senior manager at Malone Bailey. Fortunately enough, I've been working here for almost 10 years. Wow. My responsibilities are mainly auditing, supervising the team, doing review and audit for small and mid-sized public and private companies, which I mainly focus on industry, including real estate, manufacturing, software, and retail.
Okay. Well, 10 years, that's a long time.
Yep.
So, since you're a regular on the training circuit at Malone Bailey, I think you're really the perfect person to have on our podcast to really talk specifically about this topic. And before I turn it over to you, Patrick, I do want our listeners to know that we're going to be providing a very high-level overview of the ASU, but a detailed explanation of the topic is available on our website. That's www.malonebailey.com in the resources section. The resources section of our website houses our SEC and FASB update newsletters, as well as all of our podcast episodes. So I highly recommend that section of our website for a plethora of just really helpful information. So Patrick, tell us about this ASU and why FASB has decided to issue a change.
Well, the FASB is issuing this update, I believe, is to increase the transparency and comparability of the company financial statements so that they are able to recognize lease asset and lease liability on the balance sheet, as long as also disclosing like key information about the leasing agreement. So in order to meet this objective, I think the FASB amended the previous gap and created topic 842 leases. Many of the criticism before was about the lease guidance relating to operating lease in the financial statement for the lessee side. And in order to address those concerns with lessee accounting was the main focus on the board. So the board decided to not fundamentally change the lessor accounting side, and however amended the lessee side mainly. So, but there's still some changes to the lessor accounting just to make the guidance to be consistent. Okay. So that's why topic 842 comes up, and the main change are related to the lessee side.
Okay, great. So how is this ASU different from current GAAP?
Well, the main difference between the previous GAAP and Topic 842 is the recognition of lease asset and lease liability by the lessee for those lease classified as operating lease under GAAP. So the board decided that the lessee should be required to recognize the asset and liability arising from lease on the balance sheet. The board reached a conclusion that the economy of the lease can vary between agreement between each lessee. So therefore, I think there's the economic interest and there's public interest that those should be reflected in the financial statement. Under 842, therefore the public and also the investor could identify the value of the lease agreement under operating lease. There's other difference as well that are under 842 that I could share. Like there's the definition of the lease. For obviously the lessee and the lessor accounting change, the component change, some specific terms such as sales leaseback transaction change, and there's also disclosure for public company, and also there's some transition guidance. So those detailed explanation about the topic that I just mentioned can be found in our website at www.malonebailey.com in the resource section.
Okay, great. So who's affected by the amendments in this update?
Well, the amendment in this update are affected pretty much by all entity that has a lease. But if you study the guidance, the new guidance, there are always some exemption. I could provide a few exemption example. For example, like lease of intangible asset, lease for the use of mineral, oil, natural gas, lease of inventory, lease of biological asset, and most importantly from 842, it mentioned that any lease term that are 12 months or less are scoped out. So those that I just mentioned, there's also, I believe, other guidance from the codification that talk about those lease and are scoped out from Topic 842.
Okay. And when does the ASU go into effect?
Well, the amendment for this update are effective for fiscal year beginning after December 15, 2018, including interim period within those fiscal year. Pretty much those get impact for companies such as a public business entity, a not-for-profit entity, any employee benefit plan that files financial statement with the SEC. So pretty much, again, those entities, ASC 842 will be effective beginning after December 15, 2018. For all other entities, it's effective fiscal year beginning after December 15, 2019. And interim period within fiscal year beginning after December 15, 2020. And usually, as always, earlier adoption is permitted for all entities.
Okay. So where would you recommend that companies go to find more information about this update?
Well, I recommend that company could first visit our company website at Malone Bailey website. This section has a SEC and FASB update newsletter that our client could read. And also, I believe another good source of resources is from the FASB website.
Right, and the FASB website will have an entire document dedicated to this particular update with a lot of great information. So.
Sure, yes.
So as companies begin to think about this update, what kind of questions should they keep in mind and ask their accountant?
As always, for a transition period, I think the company should, for leases, I think first step is identify how many leases do you have. Second is, does your company accounting department has the information, as I mentioned, to record the lease asset and lease liability on the boat? And do we have the resources and qualify the accountant to do it? So I think we should first identify the lease, and do we have the resource for the transition? Okay.
All right. Well, Patrick, last question before we wrap up. These are going to be some questions completely unrelated to the topic that we've been discussing today, and hopefully we have a little fun with this section. It's called our This or That section. I'm going to throw two thoughts your way, and you're going to tell me which one you prefer. So, are you ready, Patrick?
Yep.
LeBron or Kobe?
Kobe for sure.
What's worse, unloading the dishes or folding laundry?
Both.
Both? All of
terrible.
the above?
Yep.
All right, Mac or PC?
PC.
All right. Okay, well, Patrick, thank you so much for taking time out of your busy schedule today. I hope you enjoyed being on our podcast, and hopefully our listeners have a much better understanding of how this ASU affects them. As always, we appreciate you listening in and invite you to check out our website. I know you've heard the address a million times in this podcast, but just so you remember, it's www.malonebailey.com. You'll find a lot of great information about our audit and accounting services, as well as much more. So thank you again for tuning in, and we'll see you next time.